we are just sitting here knocking on the door of 5,000 on the S&P. I mean, we are just a small little bit away from reaching 5,000, and we're going to do that. We're going to get to 5,000 on the S&P probably before this rally is over. Let's talk a little bit about what you need to know before the bell this morning. So markets did sell off just a little bit yesterday. Again, we've had a very strong run. Importantly enough, though, and this is kind of the conversation we'll have today, is that we are just sitting here knocking on the door of 5,000 on the S&P. I mean, we are just a small little bit away from reaching 5,000, and we're going to do that. We're going to get to 5,000 on the S&P probably before this rally is over, simply because there's a gravitational pull. These big round psychological numbers are like a gravitational pull. It's like markets just kind of want to get there, and then once they're there, they can sell off a little bit. So it's where we are right now. There's a lot of psychology, a lot of bullish momentum, but markets did pull back just a tad yesterday. Again, we're still on a buy signal, so again, nothing wrong here whatsoever. And I would expect probably by the end of this week that we may see that attempt, if not this week, next week. See this attempt to try to make it to 5,000 before we may see a bit bigger correction in the markets. Now, that's not always the case, but again, historically, when you get close to these round numbers, the market tries to want to get there. Outside of that, the other kind of news moving the markets over the last day or so have been yields. And, we've talked about fixed income here before. And of course, we had a very, very sharp rally in yields on expectations of rate cuts. And now that the Fed's having to walk that back, we've kind of reversed that run up in yields. That's not surprising at all. Markets are continuing to kind of form a bottom here. We're still on a buy signal. Getting back, we got very overbought. So again, that run up in yields, or I should say run down in yields, run up in bond prices, got the market very, very overbought short term. So we've worked off a lot of that overbought condition, and we're sitting here right near support on the 10-year Treasury that the market's trying to hold on to. But again, right below that, there's also support right at the 100-day moving average. So you've got a good bit of support here for the market. You're still running a nice rising trend line at this juncture as well. And again, the market, bonds themselves are oversold enough that there's room for an upside rally. But again, what you probably need here is a little bit more data to come in, something to help spur yields back into kind of a positive mode. But absolutely nothing going wrong with bonds here. We started this nice bullish rally back last year. That's still firmly intact at this point, and nothing really to worry about, particularly as inflation and economic growth kind of continues to slow down here a bit. That should continue to feed in to the yield structure. That's what you need to know before the bell this morning.